So if you've been shopping for a home, you guys are probably looking to get some sort of financing, whether that be through a bank or an independent lender or broker. And I think one of the biggest key differentiating factors between any lender, broker, or bank is this special 3-page loan estimate paper, which we are going to be breaking down today, some of the common misconceptions along with how to read a loan estimate when you're shopping for either banks or lenders. And that's why we brought on our preferred lender, Manny, here from Centennial Bank, to kind of go over with us a little bit about what this loan disclosure says, how to compare it when different lenders send you some things. And there's a specific box on the first page that everyone needs to be aware of when you're shopping for different lenders or brokers to make sure it's really accurate and it's not just trying to get you into the door just to get you locked in basically and sucked into the person and to using them to get a loan through their company. So Manny, I appreciate you hopping on this video and kind of going through today with us a loan estimate. I'm not too familiar myself, to be honest with you, of a loan estimate since obviously I don't do loan estimates. That's more on your guys' side of things. So I want you to kind of break down a little bit, since we have this here, of what is this all about first off, how to read it, and what should people be looking for when they're comparing, say, Centennial Bank to another bank to an independent lender.
Absolutely.
What should people be looking at here? Absolutely. So let's first talk about what exactly is a loan estimate.
Absolutely. So, well, first of all, thank you for having me. It's always a pleasure. The loan estimate is the loan in a nutshell. I always tell people you're going to get a big disclosure package. It's probably going to be 115 pages plus. You really just want to hold on to these 3 pages. Yeah. This is the most important 3 pages out of that package. And the reason being is because it's the terms of your loan. Sure. So, page 1 is very telling and very informative. By law, the lender has to give you this application within 3 days if you have given a property address. Now, something that I think is very important to notate is that most lenders nowadays will give you what's called an IFW, an initial fees worksheet. Sure. And they will make you believe that that's a loan estimate. Right. And you'd be surprised how many times I get an IFW and I can't do anything with it because it's not an official document. Correct. It's no different than your loan originator putting an email together. That's not a valid document. So if you ever want to shop, the correct way to do it, the most accurate way is with the loan estimate. Right. And you can absolutely push back to the lender and tell them, hey, I need a loan estimate, not an initial fees worksheet. Sure, of course, that makes sense. So I guess let's start off by talking about this first page and looking over it. You guys will all have this on your screen, a little bit of what the loan estimate looks like. So obviously we have all the applicant's name, property address, all that good stuff at the top, the terms. Correct. You have the purpose, which, what are the other purposes? You have purchase. You have purchase, you have your refinance, sure. You have your cash out refi, and that's it. Okay. And then you have the product here, which obviously for this one, it's a 5/1 adjustable rate mortgage, so it's an ARM product. Correct. And then loan type, conventional, FHA, VA. Correct. And then the loan ID. Correct. And then I think one of the biggest ones is going to be the rate lock section. Correct. So I want you to kind of talk about that really quick. Absolutely. So when people are shopping, many times they think that they're committed or where. And the first thing that I always look at is on the loan estimate is to make sure that the rate is locked. It says yes or no. Yep. If it is locked, it'll tell you when it expires. And if it's not, then obviously it's going to say no. And then at that point, if it says no, then I'm going to tell you, as the consumer, you need to go back to the original lender and make sure either the loan is locked or stop playing games. Right. One of the two. Sure. Then underneath that, you have your loan terms. You got your sales price on the top left. Then you have the loan amount. That's what you have signed up to pay for over the next 30 years. Yep. And as you mentioned, on the top right-hand corner, it'll tell you the term. So, so you know. And then right below the loan amount, you have the interest rate. It'll tell you whether it's a fixed rate or an adjustable. And in our case, this example happens to be an adjustable rate mortgage. So it would adjust after year 5. Sure. And in this case, it'll adjust on year 6. It states the monthly principal and interest. It will tell you if there's any prepayment penalties or any balloon payments on there. So meaning if you win the lottery and you decide to pay off the home early, there's no prepayment penalty. Or there's no balloon payment saying that, hey, after 5-6 years or whatever your adjustable rate
term is, if there's no balloon at the end of the term, and in our case, there's not.
Right.
So the loan estimate will tell you that. It also gives you a breakdown of your payments on year 1 through 10. In this example, it's an adjustable, so it's showing you what can and can't happen in case it adjusts. And then it also includes your insurance and taxes and insurance. And it'll say whether you're in an escrow account or not. And then in this case, the example, they are escrowing. So in our case, in this example, the borrower is paying $27.94 in just principal and interest. And then their taxes and insurance are $881 a month. So their total estimated monthly payment will be $36.76.
Sure.
Okay. And again, this is the loan estimate. So these are still what's given to you within 3 days of application. This is what you want to hold on to 1 week prior to closing to compare with the closing disclosure.
Sure. Okay.
On the same page, it'll give you estimated closing costs. In this case, it's around almost $20,000. It's a $560,000 house. Our client happened to put a significant amount of money down. I think, if I recall correctly, this was at least 20% down. So their cash to close was around $131,660.
And the cash to close obviously includes the closing costs.
Correct. Exactly. So page 1 is the nuts and bolts of the loan. That's definitely the most important.
Basically the synopsis of
Correct.
the loan.
Exactly. The synopsis. And then now page 2 and 3 just gives you the itemization of the charges.
Sure.
So if there's anything that you want to take away here, as far as shopping goes, section A is always what lenders look at to see what the lender intrinsically charges.
Right.
Or holistically charges, I should say. So in our case, our bank charges $12.60 as origination. This was actually last year, because actually now my bank charges $13.95. But it gives you the breakdown of the fees right here.
Yep.
And if there was any points, and to buy down the rate, by law, Section 8A has to disclose that. That's why the loan estimate in Section A is very critical, because as a lender, I always look at that and I can see if that other lender, my competitor, is charging them a point or not. So Section A is very, very critical.
Okay.
Then, moving on to Section B, C, D.
Yep. Just basically what you can shop for versus what you can't shop for. And obviously things that you can't shop for, that's what the set fees are for the bank or the lender. And then C is basically, if you find it cheaper and you really want to go somewhere else, it's up to you.
Exactly. Correct. Exactly.
And then under the other costs, then in the top right hand corner.
Correct. So this is actually where it gets a little bit more interesting. Your other costs, taxes and other government fees, is really not much you can do there. Your prepaids. This is where it gets interesting. In our example, this client was closing towards the end of the month. So we were factoring only 3 days per diem interest, but if you notice there, that's $78 per day.
Right.
So they paid only $235 in per diem interest because they closed towards the end of the month. This is critical because if you close on the 1st of the month, you're going to see 30 days of per diem interest. And if you were to do 30 times 78, well, that'll add up. Yeah. So in all actuality, it'll save the client a couple bucks to close towards the end of the month. I'm not saying try to make it your goal to close at the end of the month.
Every loan of mine.
Yes, we're not closing every month. But just that's something to keep in mind.
Sure.
And then you have your escrows. It varies, by state, by county, depending on when they're collecting the taxes, how much the seller hasn't, what the seller hasn't paid up to, and whatnot. But here you'll see your escrows.
Of course.
And in our case, they collected 3 months for insurance and 8 months for taxes. Then just if you keep on going further down the page, it kind of itemizes it all. But
it breaks it down,
and you have E plus F plus G and H. So in this case, the total closing cost came out to almost $20,000, $19,660. Then it also gives the down payment. Down payment came out to be $112 in this scenario.
And then it just shows cash close. So that's basically where it comes from. So on page 1 at the very end, it gives the total estimated cash to close, but then on page 2, midsection, it breaks it down a little bit, kind of where all those numbers came from.
Exactly. Right. And keep in mind, the loan estimate will typically be a little higher than the closing disclosure, at least if you have a good lender, it will be.
Sure.
And the reason being is because, A, by law, whatever's disclosed has to go.
Right.
If the lender was to under-disclose, the lender has to absorb those costs.
Right.
So this is usually a little higher.
A little bit on the higher side. Sure.
And then the second reason is we don't want to have your clients struggling to get, it could be $200, but if you have $112,200, but you need $112,400, and you're scrambling that week for $200 after you have $112,000, you don't want your client doing that. So it's always just best to over disclose. And what I always tell people, you can figure this money here, cash to close, is plus or minus $1,000.
Right.
That's usually what I tell
them. All right. And then moving on to page 3, then, is there anything else that's important on page 3 to look at? Page
3 is important because it states how much you will pay over the life of the loan. But I want to be clear on this. This is not. This is what happens if you pay the minimum every month. So your total interest, your tip, is 156%. Yes, but that's if you pay this loan off in 30 years, paying off the minimum.
Right.
It's no secret that when you finance something, you pay over 2, 3, 4 times
of course.
over. So this is that page.
Yeah.
This is that page. So that's not to scare you.
Right.
It is the facts. This is how much you'll pay over the life of the loan, but this is how everything should be disclosed when you're financing, because that's just how it works.
Yeah,
But by law, obviously, the mortgagee has to disclose everything.
Right.
So the last page is important. It's just showing things over the life of the loan, but it's more for your information, not necessarily the most important. I see page 1 is the most important.
Of course, yeah, because page 1 obviously breaks down all the individual costs, what to expect, interest rates, all that good stuff. So what would you say, finishing off this video, is kind of what are some key things about the loan estimate that everyone should really take away from this video?
Yeah, you hold on to this document near and dear to your heart. This is the one you want to compare to the closing disclosure, which is issued a week prior to closing. This is the one that you need to be comfortable with. If you're not comfortable with these numbers, you're not comfortable with the loan.
Sure.
So, and then I think since you get this within the first 3 days of the application, I would get very familiar with these numbers. If you're not comfortable with them, you need to talk to your lender, see what can get changed around. And then also just keep in mind that this is the terms. If you pay it off in 30 years, paying the bare minimum that's listed here, this is what's going to be.
Of course.
Your terms.
Right.
What I always encourage people is to take this loan estimate, make sure you're comfortable with that monthly payment, and make sure that you can divide this payment by 12 and tack that on.
Sure.
Because now this document, instead of being a 30-year document, is now a 23-year document.
Right.
And the amount of money that you'll save, that scary figure that you see on page 3 gets cut in half.
Right.
If you make one extra payment a year.
Which we can make another video on that.
100%.
Just talking about how to maybe reduce the final end payment, or the final end amount that you pay for a house. If you make one extra mortgage payment, it goes a long ways for sure. So that kind of sums up a little bit more about the loan estimate. If you guys have more information, or you guys have more questions about how to read the loan estimate, or what your loan estimate looks like here, I will put Manny's contact information down in the description down below. And if you guys are looking to buy or sell a house, I am a broker associate here in Sarasota, and also co-founders of JN Development Group, which is a custom home builder here in Sarasota. So if you're looking to build, you guys can reach out to us directly to set up a call for a 100% free consultation to see if building may be the right fit for you, or if you're looking to buy a house and relocate here to the Sarasota area. We do have dedicated buyers relocation guys for Sarasota, Northport, Osprey, Venice, and all the surrounding areas. But if you guys have just general questions, or you guys just want to comment on this video, please comment in the comment section down below. But if you guys want to reach out to us directly, like I said, we'll have all of our contact information down in the description down below. But with all that being said, I appreciate you guys checking out this video, and we will catch you guys all next week.